Hi, and thanks for watching. In light of the recent turbulence and volatility in the marketplace, I wanted to provide an interim update, special report, just giving you a brief overview on what's going on in the markets, what's driving the activity, and where we go from here. There's been a lot of downside action in the markets, started about the middle of last week and has carried over into the action today. And a lot of people want to point fingers and try to decide or identify what has caused the market to sell off the way it has. We don't think there's any one particular catalyst, but a culmination of a few factors that have come together to create uncertainty. And as we know, financial markets, if they hate one thing and one thing only, it's uncertainty. They want to know where we're going and how we're going to get there. And anytime you throw that variable of uncertainty into the mix, things can get a little bit dicey. There's been a lot of speculation over what's going on in China, what's up with the oil markets, and where we go with interest rates from a standpoint of what the Federal Reserve will do at their meeting next month. And while a lot of these things are important, we do not see the selling that has occurred over the last week and a half to be justified. We think it's far overdone, we think a lot of it's irrational, and that's what generally happens when you see fear enter into the marketplace. Investors that don't have a plan, that don't have a strategy, they tend to become irrational, they sell first, and they think about the consequences later on. And we're seeing a lot of that happen over the last couple days, even characterized by the moves that we've seen in the markets today. A very swift sell-off on the open, followed by a bunch of heavy buying, which has brought the index all the way back almost even on the day. Still a couple hours left in the day, and we'll see where we go from here. But this type of market movements that we've seen, that's just the overall characterization of irrationality. This is why we have a plan in place. This is why we have a very solid portfolio strategy that we employ. This is also why we diversify our investments, and we don't load up our portfolio entirely with growth companies. We need to have our fixed income in the portfolio, our conservative, slow-moving investments, so that when we see times of volatility like we've seen over the last week, those fixed income investments are there to do their job, to create stabilization, to really flatten out the portfolio. So this way, when we do move to the downside, we don't take the brunt of the hit as some of the market indexes are doing. We've had a lot of phone calls and emails from people who are very well aware of the strategy and they're not panicked at all. And that's a byproduct of really being familiar with our process and knowing what we're going to do and how we're going to react in certain situations. For those of you that may be concerned, what I would tell you is, first of all, in events like this, the number one thing to do is absolutely nothing. Investors that sell out their entire portfolio always do so at the wrong time. They lock in losses and they miss out on the rebound to the upside. When we look at the U.S. economy as a whole, we still think we're on very solid footing. This is nothing like 2008. The economy is nowhere near similar today to what it was like in 2008 prior to the most recent financial crisis. The news media is having a field day with the last couple days in the market. Every newspaper you open, every website you go to is talking about the impending crash in the stock market. We see this as a very healthy market correction. In a moment, I'm going to bring a chart up on the screen that will show you the number of pullbacks we've seen in this stock market since the bull market began in 2009. And while they may be far in the rearview mirror at this point, you will see that we've experienced 14 separate pullbacks in the stock market, and the market has still moved on to higher levels. So the type of correction we're seeing unfold here is definitely not catastrophic. But it's important to remember this is why we have a strategy. If you're a long-term investor, nothing has changed on a day-to-day basis. You should not allow the market movements and some small hiccups that occur along the way to change your strategy, to dictate your overall strategy or change your goals. We own great investments, and even in times like this when the markets pull back, we're looking for more opportunities for value that presents themselves and for different opportunities to add to the portfolio if we think some investments have fallen too far too fast and present great value. We'll be looking to add those in the future. So now I'd like you to take a look at this chart that I have on the screen. The chart on the screen shows the number of declines that have been 5% or greater since the bull market began in 2009. As you can see from the chart, there's been 14 separate instances where the market pulled back 5% or more from their recent all-time highs, with the average decline coming in at 8.4% per correction. The current correction we're experiencing has just reached 10%, and while it has not been fun, you can see relative to the bull market environment that we're in, it is rather normal. As you can also see in the chart, after each one of these corrections unfolded, the market continued on to higher pricing at a later time. So while we do not root for these type of corrections, and they're definitely not fun to live through, they are a necessary evil in order for the market to regain its strength and move on to higher pricing. And as always, we're here to answer any of your questions or concerns. You can give us a call, send us an email. I'll be happy to discuss your individual portfolios with you. But I just wanted to put out this video to let you know that while these type of movements in the market are not fun, we're not panicked, we're not scared. We see this as just a byproduct of markets, kind of a necessary evil in order for the markets to work off some of these conditions and move higher in the long run. Thanks for watching. If you have anybody else that you know that's not receiving the type of portfolio service and advice that they need, or maybe they're just very scared during this time, feel free to send this video on to them. Share our information. We'd be happy to speak with them as well. Thanks for watching, and we'll see you soon.